The three M's of trading are methodology, money management, and mindset, and they each play a crucial role in your success in trading. As a trader, you will need to master all three M's, but you also need to know the relative importance of each factor. In this video, I will explain how each factor affects your trading success and which factors you should be focusing on to improve your trading. Hi, this is Spencer, founder of Synapse Trading, and I've been trading and traveling across the world to teach and inspire others how to do the same. In this video, I'm going to talk about how each factor affects your trading success and which factors you should be focusing on to improve your trading. Now, what to focus on in trading? Having studied many professional traders, I found that there are three crucial factors that have led to their success. All these market wizards have found success because they have understood and mastered the three M's of trading: the method, the money, and the mindset. Method or methodology is the process by which a trader enters into the market using either technical or fundamental inputs to make their decision. Money or money management, this includes capital allocation, risk parameters such as drawdown limits, reward to risk calculations such as your entry price, your profit target, and your stop loss. And lastly, we have mindset, which is psychology. And market psychology is the most important part of trading and determines how well you can execute your trading plan in the market in real time. To many new traders who know of these three M's, they tend to make the mistake of giving equal weightage to all three parts, or even worse, almost 100% weightage to the method. Actually, the psychology or the mindset is the hardest part of trading because emotions like greed and fear run wild once your money is at stake in the market. Hence, your degree of rational analysis is only limited to how well you can manage your psychology. Without good execution, the plan is useless. The money and risk management is also essential because it ensures your survival and consistency in the markets. After all, the number one rule is capital preservation. As Paul Tudor Jones said, don't focus on making money, focus on protecting what you have. Now, the first thing we want to talk about is the methodology, and this should be given a roughly 10% focus. Now, the methodology refers to your method of analysis, your strategy, your setups, basically the basis on which you make your buying and selling decisions. As I'll be covering this in greater detail in other videos, I will not be elaborating too much on this here. For now, all you need to know is that the most common tools used to make such decisions are technical analysis, fundamental analysis, or some combination of both. Next, we have money management, which I'll give a roughly 30% focus. Money management or risk management refers to how well you use your trading capital to maximize your returns while at the same time minimizing your risk. This includes your capital allocation per trade, such as the 2% money management rule, and also things like risk parameters for each trade, such as maximum drawdown limits. This means that for each trade, you will need to decide on the entry price or the EP, the stop loss or the SL, and the target profit or TP before you make each trade, so that you will be able to calculate the reward to risk ratio or RRR ratio to decide whether it is worth taking the trade. To be profitable in trading, all you need is a good balance between the win ratio, aka the hit rate, and the reward to risk ratio to ensure that you have a net positive expectation on every trade. For example, if you have a 40% win ratio and your reward to risk ratio is 2, you will still end up net profitable in the long run. Last but not least, we have the mindset, which I will allocate a 60% focus. The mindset or trading psychology is definitely the most important aspect of trading and is also the hardest to master. This will determine how well you can make good decisions under stress and consistently execute your trading plan without getting swayed by emotions. Thinking accurately requires a certain level of self-awareness so that we can avoid any behavioral biases that skew our rational thinking and decision-making process. In conclusion, to be successful in trading, You will need to master all the 3 M's. But the problem for most traders is that they only tend to focus on 1 to 2 factors and neglect the rest. As a result, they might become very good at analyzing charts, which is the methodology, but remain poor at money management and trading psychology. To improve your trading, the fastest way to do so is to work on whatever you are weakest at, because that has the most room for improvement. Now that I've shared the 3 important elements of trading, which do you think you are lacking the most and will have the biggest impact on your trading if you work on improving it? Let me know in the comments below. And if you have enjoyed this video, do remember to like and subscribe and hit the bell notification icon to receive the latest updates. That's it for this video, and I'll see you in the next one.